within the Petco network, they tend to stay, or do they?
We've had very strong retention. The dynamic right now is we continue to bring in new customers. So one of the strengths in the quarter was we brought in 325,000 new customers into our franchise.
Wow.
The competitor that you mentioned bled customers last quarter.
Is that unusual, that number?
This is our 14th consecutive quarter in a row adding customers. So we've continued to add customers, which speaks to the strength of our model and our marketing. So you have more customers coming in. Those customers that we're churning were lower value, kind of pick up in the pandemic. The high value customers who've been with us for more than a year, are spending more.
So your loyalty program, that's the Vital Care program.
Correct.
Right. So my analyst here at Bloomberg Intelligence, who covers your stock, she says to ask you about Vital Care. How does it work? Is it successful? What are the metrics you guys look at there?
Yeah, so for $19.99 a month, you get your checkups, you get grooming discounts, you get discounts on products. We're ahead of our expectations. We cited that we're up at 285,000 members in the Vital Care program. And for this type of economy, it's a perfect program. You'll see us make some announcements shortly on Vital Care to further step that up. So we're very pleased with it. There's nobody else who can offer it, right? Because the mass players don't have grooming and vet. The online players don't have those type of assets.
Yeah.
We're the only ones that can bring that all together. The only other pet specialty scale player doesn't own their vets, right? We own our own vets, so we're able to bring.
You own the vets. Okay.
They are Petco in place, and we ingested 800 new veterinary professionals with the purchase of Thrive, the other half of our joint venture with a vet network. So we're over 200 vets in our hospital, in our stores. When I first met you, we were probably at like 10 or 20. So
it's a big
we're
difference.
Scaling rapidly. It's pretty much the fastest vet rollout in history.
Well, how often is it you bring somebody in for either a vet visit or some grooming and they're going to buy something? I'm just curious about the connection, the correlation.
Well, here's the numbers.
Yeah.
When we put a vet hospital in one of our stores, we get a 4 to 5 point center store lift in merchandise. That's despite taking out 2,500 square feet of merchandise footage. Right, so we take out 2,500 to make the vet, but we still get a 4 to 5 point lift because of the traffic and also because of the type of customer that is going in to see a vet. They're the higher end customers.
How many stores do you have today?
Yeah, around 1,450.
And they're all U.S., right?
We're number one in Mexico, online, offline.
Okay.
And then we have an initiative with Canadian Tire for some store-in-stores.
Okay, so how do you see your store count as a part of your growth story? Are we adding stores here? Is there geographic areas you need to get into or muscle up in? Yeah,
so we've done the culling where there was less profitable. Okay. Now we're back into a growth mode. We'll add 15 in the back half of this year. Partially those small town rural stores that I talked about, which we're very excited about. It's an $8 billion addressable market for us, and some high growth geographies.
Okay. Well, how much of it too is, it's interesting what you said about the vets, because you guys, the doctors are yours. Are you guys competing increasingly with other private equity? Because I feel like I know my vet, who used to be a standalone, has been swooped up in like these networks of vets. Like I see this.
Really?
Yes.
That's a
exactly.
play?
Yes. So I'm curious what that means for you, though, competing for those vets.
There's been a lot of private equity action in the vet space, which gives us our opportunity because there's very high multiples being paid for those vets.
Yeah.
So after you pay that kind of money, then there's a lot of pressure to upgrade efficiency.
They're not as much fun, I'm going to tell you.
After,
no offense, the PE guys.
Well, we love our PE.
I know you do. I know you do.
CVC and CPP have been phenomenal.
I know you do.
But that said, we have a different approach. We allow the vets to practice medicine as they see fit, which is important. We give them flexibility in their hours because we have a lower customer acquisition because we have traffic coming in to our stores. So, and then we also offer stock. So our time to fill roles is lower than the industry average. Our retention is better. We have some of the highest satisfaction is our vet employees. So it's been very, very strong for us.
I'm just looking at the HDS function, the holders function, and you're right. There are private equity owners for your company.
Yep.
So if I was at KKR and they drop a deal, I have to do a pet deal? I mean, what's the story behind your company and your private equity relationships? How did that come about, and kind of what's the plan from here?
Yeah, they bought it multiple years ago, CVC and CPP. As I said, they've been phenomenal. They've supported us really investing in the business, investing in things like vet, investing in things like remodel, fresh frozen, and that's really enabled our growth. You know, I talked about 34% three-year growth. They've enabled it, and you know, there was a moment of truth about 4 years ago when I said I wanted to invest in compensation and benefits, and
right.
you know, the reputation is that's not where they tend to support, and not our PE, but in general PE. And the answer was absolutely, we need to do that. We need to make sure we're treating the team properly. And they've supported all the investments we've made. Actually, our average wage is now over $17 an hour, and today we announced that we're over $15 as a base wage rate. We've absorbed every benefits hike at the company level, not passed it off, and that's with the full support of CVC and CPP. So they've been phenomenal partners in turning around the business.
Yeah, it does seem like it's played out really well for you, and I just like my experience is that it became a very different experience. You know, taking my pups to the vet. One thing I want to ask you: where's growth going forward? Because you do have some international exposure, Ron. So where do you continue to grow?
Yeah, we have a $40 billion addressable market that we're just leaning into. So if you look at the vet market, it's a $30 billion market.
It's massive.
We only have 200 vets stores so far. We said we're going to get up to 700, 800 vets. So that's one area. The second thing is small town rural. I talked about an $8 billion market. That is exploding from a population standpoint. Our first store is doing very, very well. You'll see us lean into that. Third is RX. RX is a scale addressable market. Again,
it's a mess in general.
There's a lot of
I think there's
customer
ways to make it
frustration.
easier, right?
That's exactly right.
Yeah.
And provide a holistic solution there. And then the last thing I would cite is insurance. Insurance, if you go to Europe, insurance is about 10% penetrated for pet parent. Here it's 2 to 3% penetrated. So we have an offer. It's growing double digit, but we can go even faster, and we'll have some news shortly on that front.
Is growth via acquisition in Europe, perhaps? Is that an option? Is that something that's on the table, or you guys feel like you got enough opportunity here in the U.S., North America?
Yeah, I like Mexico and maybe extending off of that.
Okay.
But we don't really comment on acquisitions, but that's a pretty well-served market right now.
Hey, just have a few minutes left here, and I think it's an interesting week where we are talking big macro things, and I know we've touched on some of them with you in the past. You know, when you look at what seems to be conflicting signals around within our economy, whether it's labor data, or labor data seems to be very strong, but you see continued weakness within the housing market and other areas. How do you see it, or how does it kind of factor what you do in terms of your longer term strategy at the company?
So let me
do you guys stay at home? Are you back at your offices talking Jackson Hole and Jay Powell? No, seriously.
I know.
I'll break it into two.
Yeah.
Right. In terms of the here and now, navigating through choppy waters, our plan is to navigate through what we assume are going to be similar economic environment to today. Right? We're not economists. We say, okay, well, let's assume this is going to be steady state for 6, 12 months. How would we navigate through that? And that's part of the revised conservative guide that we put out today, was let's make sure that in this environment we can deliver or over-deliver. From a long-term strategy standpoint, our long-term strategy is a winner. Right? The category is going to grow 7%. We continue to gain share in areas like super premium, gain share in vet, gain share in digital, basically where all the profit pools are. So it's all about executing against our strategy. So in the short term, navigate through the choppy waters, assume they're not going to change in the short term. In the long term, continue executing on our strategy. And that's the other thing in the financials is we have such amazing growth opportunities that we want to continue to invest in those growth opportunities so that we can take advantage of them coming out of this economic situation.
What's the concern that your private equity shareholders have, do you think? What's the big thing that keeps them awake at night? How's your balance sheet? Is competition? What do you think? What do you hear from them when you go make your presentation to them?
Yeah, balance sheet is strong and getting better every single day. We've had a significant reduction in our debt levels, and that's healthy. They've been supporters all along. They've been along for the ride since minute one, both strategically as well as what we've done for our people, like I said. So I think they'd say, hey, just keep executing on the strategy. It's going to work. We have a phenomenal category. We're very well positioned in that category. So it's all a matter of making it through this current economic environment and then executing on a strategy to win.
Do you feel like you have great visibility or decent visibility? You did talk about why you reined in some of your estimates. The visibility for next year, is it a tough call at this point?
Well, the nice thing is one of the factors should be gone, right? We're overlapping unprecedented stimulus.
Yeah.
And that factor will not be there, right, when we head into Q1 of next year. So that is very good. Where inflation goes, I think everyone has different theories on that. So as I said, we're assuming steady state on that. And if it's better, awesome. That's going to show up in our supplies business. But it'll be really good not to have the noise of the stimulus in the year ago.
Yeah, it would be nice for the conversation to move along. We don't often get to do such deep dives.
Yeah,
you have been a gem, and I feel like we covered some really smart ground. Thank you so much.
Thank you. It's always a pleasure.
Always a pleasure. Ron Coughlin, he is Chief Executive Officer at Petco, of course, joining us here in our Bloomberg Interactive Broker studio. All right, off for a check on the markets and your top business stories. Off to Doug Krisner with the Bloomberg Business News Flash. Hey, Doug.
Hey, Carol, I want to begin with the crude oil market. In the electronic session, WTI trading above $95 a barrel now. The U.S., we are told, has sent its response to the European Union regarding the latest proposal to revive the multinational accord that will limit Iran's nuclear program in exchange for lifting certain sanctions. WTI 95.05 and the Brent contract right now at 101.38. The equity market very near the best levels of the day. We have the S&P 500 right now up about 0.4%. Every one of the 11 industry groups in the S&P higher today. Real estate leading the advance. Dow Industrial Average up about 0.2%, and in the NASDAQ market, the composite index better by about 0.6%. We're still seeing a rally in shares of Peloton Interactive, shares up more than 18% on word the company will sell bikes and certain accessories on Amazon. And Tesla splitting 3-for-1 after the bell today, those shares up by more than 0.4%. We've got Treasury yields moving higher across the curve, preparation for the speech by Fed Chair Jay Powell on Friday at the Jackson Hole Symposium. Markets braced for a hawkish message. 10-year Treasury now at 3.11. We're up more than 6 basis points on the day. I'm Doug Krisner, and that is your Bloomberg Business Flash.
It is indeed. All right, Doug Krisner, thank you so much. Carol Masser, along with Paul Sweeney, here in our Interactive Brokers studio.
Are you a Peloton person?
I am a Peloton person, although I'm not so good about getting on it all the time.
I'm with you. My girlfriend is just a maniac.
My daughter is too.
1,200 rides. She just hit her 1,200 rides.
She got the T-shirt?
Probably
a
she's
long
got
time
everything.
ago.
And she's got a live class booked with Jen Sherman in a couple of weeks, so she's all in. So there's a lot of people like that.
I heard you liked Jen Sherman
I'm
earlier.
a big Jen Sherman fan. Big Jen Sherman fan.
All right, we got to talk about Peloton because it sounds like Peloton has maybe figured something out, at least investors reacting that way. You can now apparently get Pelotons, or will soon be able to get them on Amazon. So there's a lot going on. So let's talk to it with our own Geetha Ranganathan.
All right, Geetha, thanks so much for joining us here. Peloton, first of all, are you a Peloton person?
I am not. Sorry.
You're not. Okay, just going to get that full disclosure. All right, so what's going on? This seems like a big deal to me because it expands the distribution like a millionfold. What's the company saying?
Yeah, so right now, that's absolutely right, Paul. So up until now, the only way to get Peloton was either through its own website or its showrooms. And as you know, this was, kind of this tech unicorn.
Showrooms. That alone says something, Geetha. Go ahead.
Yeah, and it's kind of gone from like this pandemic darling to a post-pandemic victim. And really one of the major problems there has been that demand has been so weak, just kind of given, gyms reopening and people kind of going out more. And they've also kind of been hit with this double whammy because they had the demand softening, but they also had this oversupply of all their hardware. So I think this is a great move for them. This creates a new channel for the brand. It expands their reach and distribution, as you both mentioned. Remember, Amazon has a huge customer base in the U.S., about 150 million Prime, U.S. members. And then you can obviously get fast shipping. So it kind of helps them clear that excess inventory, really improve their unit economics.
I gotta say, you can buy just about anything on Amazon. So if at one point we thought it was like, oh my God, we're trading down by shopping on Amazon, I can get almost about anything. So will it help? Will it tarnish their brand? It doesn't sound like it.
I don't think so. I think they
Okay.
really kind of needed this. So, there are really multiple problems at Peloton. So there's been a new management team that is really kind of trying to fix all the missteps of the old team, if you will. One of the problems has kind of really been costs. And so believe it or not, they have gone through about $2 billion in cash burn in the first 9 months of fiscal 2022. So really the biggest problem for this company right now is kind of righting the ship there and cutting down costs. And so what they've done is they've done quite a bit of restructuring efforts, which I think are all steps in the right direction. They're closing down a lot of their showrooms. They're no longer building that their own production facility in Ohio, which was supposed to cost about $400 million. They're moving away from last mile logistics, so they're going to third-party logistics companies. So they're doing a lot to kind of right-size costs. It's now going to come down to right-sizing demand, and so I think once demand stabilizes, I think that the Amazon deal kind of really helps them do that.
So, Geetha, you and I, we've known a lot of businesses that have a recurring kind of subscription type quality to it, and that's really what investors like to see. So for Peloton, what's the mix of their revenue right now between selling those $2,400 bikes or whatever they cost these days versus that monthly payment that people make every month?
Yeah, unfortunately, still a lot of their revenue is coming from hardware. And as it's almost 75% of revenue that comes from hardware, which really is a zero, razor thin margins on that business. Yep. It's really the subscription business, which gives them 70% gross margin. So one of the things that the new CEO basically said was he kind of wanted to move away from that hardware focus to that subscription-heavy asset-light model. So, to that end, they've been doing a lot of things. They've raised their all-access subscription price for the very first time. It's gone up to from $39 to $45. They've, been tweaking all the prices of their hardware. So they're trying different things. But I think their long-term play is definitely to become a more subscription-based business model, which kind of then really helps them with their margin expansion story as well.
So you look at the chart here, and it's, this is my poster child for a pandemic chart, what a pandemic stock chart looks like. So my question, Geetha, what really is the bull case from here? Is it just executing on fundamentals? Do they have to turn over their shareholder base? What do you think has to happen for this stock to be a winner?
So I think the first thing that they need to do is turn free cash flow positive. I mean, that's the first order of business. I think all the steps they're doing right now really helps them do that. And I think in the longer term, of course, we need to kind of see some product innovation happen. We need to, so right now they have about 7 million members. They've identified a total addressable market of about 100 million members. So anything that kind of helps them get there, I think, makes them a winner longer term.
Do you agree with that addressable market that Petco has laid out? Do you agree that that's their addressable market?
I think so. I mean, there are right now about 62 million gym memberships in the U.S. So these guys have 3 million subscriptions or about 7 million members. So I definitely think that 100 million looks like an achievable target.
All right, here's the important question of the day, Peloton. Why don't they have their New York location open for every class that they can? I mean, it's so select. I mean, everybody's back out and doing stuff, and that's part of I think the atmosphere and the sense of Peloton is I get to see my instructor. Mm-hmm. And I get to see the crowd there and all that kind of stuff. Have they talked about getting back to maybe more normalized operations from that perspective?
Not really. I think I actually haven't heard anything from them about that.
But did you wonder if you want to kind of distinguish yourself amongst how many different workout places there are out there, like by doing that, right?
Well, I tell the instructors, and I do know one, I tell the instructors that they have huge value. That if they're not, I mean, they're incredible. Their brands are personal brands, and you see a lot of those instructors doing a lot of other stuff. Ali Love does stuff for the Brooklyn Nets and all kinds, and they're spinning their brands like crazy, and I hope they're getting compensated for it.
They used to, right? I mean, Geetha, my understanding is some of these guys are getting paid, and gals are getting paid a lot.
Oh, absolutely. I mean, this is all about content, and yes, you're absolutely right. They do get paid. They pay their instructors top dollar. They do attract the top talent out there. This is why everybody who is such a that's why you have such a hardcore super fan base for their content.
I have to say, I did do something online, a Peloton video. I think it was Pilates with my daughter, and she really taps into that online. Can that be a much more significant business for them? I just got about 30 seconds, Geeta.
Yes, they are looking to kind of move into that, make it accessible to, a much wider audience, kind of open up that subscription model. The one Peloton is kind of their new mantra, fitness as a service. So, but we'll still need to get more details on their strategy.
Well, a great deep dive into Peloton. And speaking of diving, I mean, Peloton shares, they're up like 18% in today's session, although they're still down about 62% so far this year. Geeta Ranganathan, technology and media analyst at Bloomberg Intelligence from our Princeton, New Jersey bureau.
Absolutely. Good stuff. Right now, let's go to Nancy Lyons, Washington, D.C. We'll get world and national news. Nancy.
Thanks, Paul. President Biden is fulfilling his campaign promise to provide relief to those still paying off their student loans.
If you make under $125,000, you get $10,000 knocked off your student debt. If you make under $125,000 a year and you received a Pell Grant, you'll get an additional $10,000 knocked off that total, for a total of $20,000 relief.
Biden says 43 million people, or 95% of borrowers, will see some form of relief. He's also extending the pause on federal student loan payments through the end of the year. Progressives, including Senator Elizabeth Warren, had been pushing for a higher level of debt forgiveness. She admits she'd like more, but told CNN it will make a difference.
The steps that the administration has taken today are powerful. They are important. There are millions of people right now who should be celebrating over what they have just heard, because their financial lives have just gotten a whole lot better.
Warren tells CNN doubling the forgiveness for Pell Grant recipients means relief for those with the highest financial need. Republicans say Biden's debt relief plan will further fuel inflation. A new congressional report is shedding light on the fact advisors to former President Trump pressed the FDA to reauthorize a drug as a COVID-19 treatment, even after the agency said it lacked efficacy and posed safety concerns. In addition to pressuring for the use of hydroxychloroquine, the report found the Trump team executed other coordinated pressure campaigns to influence the FDA's actions. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 Newsroom, Washington, D.C. I got to say, Carol Massar, along with Paul Sweeney, of course, host of Bloomberg Surveillance with Tom Keene earlier on Bloomberg Radio, and also host of Bloomberg Markets with the one and only Matt Miller.
When he decides to come in, he has a very liberal vacation policy.
Oh, to be Matt Miller.
I know.
That's what I want to come back at.
He can have my days. He has much more fun with them.
I feel like every day, Paul, we can come in and we'll be like, oh, Elon.
Yes, that's exactly the way. Right now, apparently he doesn't want to hear complaints from customers trying out the driver assistance system that Tesla plans to start charging $15,000 for in the coming weeks. Apparently, a customer, was critical of the system, and he's not taking that. He fires right back via Twitter.
He does. Scolding a Tesla owner who posted videos to Twitter on Tuesday, yesterday, showing that a new beta version of the system, as you said, marketed as full self-driving at times, struggles with right turns and other basic tasks. Customer wrote that he spent more than $32,000 paying for this system multiple times. And then, what did Musk say? 10.69 is in limited release for a reason.
Yeah,
so it's in beta? Is that what he's saying?
He's saying it's in beta. I tell you, I don't know about these self-driving cars. I'm just not sure I can make that leap. I did get to test out the Ford F-150 Lightning. Matt Miller arranged that for me.
Yeah.
Ford let me have it for a few days. It's the electric one. It is awesome.
Self-driving?
No, I didn't do the self-driving, but just the electric car technology. So now I've made that leap I get the EV thing. The performance is awesome. But self-driving, that might be a bridge too far for me.
Have you seen the anti-Tesla campaign? It's an individual, I think, who's running for a political office. I don't have it up in front of me, but it kind of says he's very anti the self-driving, and it shows like these tests and what happens with the cars.
I have driven, test-driven some newer cars with that do have the stuff that keeps you in the lane and all that kind of stuff.
It's pretty remarkable.
It is. It's amazing. I don't know really how it works, but it does work.
I take my hands off the wheel, and the car drives itself, and then it yells at me after like 30 seconds to put my hands on the wheel. As we said, isn't a day without Elon. All right, this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Fewer than 13 minutes until the closing bell for the Wednesday session. We have the S&P 500 higher by about 0.5%. Energy stocks out in front of this advance. The S&P Energy Group up by more than 1% right now. Energy stocks moving in tandem with crude oil prices, which are rallying in the extended session, up by about 1.6%. This is WTI 95.25. Earlier today, a government report showed the U.S. is exporting a record number of crude and refined products. At the same time, the market is very eager to learn whether nuclear negotiations will clear a path for Iran to put more oil on global markets. The Brent contract up about 1.4%, 101.60. Dow Industrial Average average ahead about 0.3%, and in the NASDAQ market, the composite index rising about 0.7%. After the bell today, Tesla shares will split 3 for 1. The stock well off the best level, higher now by under 0.3%. Peloton Interactive shares up nearly 20% right now on word the company will begin selling bikes and certain accessories on Amazon. Late yesterday, hawkish comments from the head of the Minneapolis Fed, Neil Kashkari. He told Reuters his biggest fear is misreading the extent and persistence of price pressures, and then he would have to deliver more aggressive Fed tightening to control inflation. Speaking of the Fed, Chair Jay Powell at the Jackson Hole Symposium on Friday. I think it's safe to say a hawkish message seems likely. 10-year Treasury up more than 6 basis points. We were last quoted in New York at a yield of 3.11%. That is your Bloomberg Business Flash.
All right, Doug Krisner, thank you so much. You are listening to Bloomberg Business Week. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. With a new school year getting underway, districts in the U.S. are sounding alarms about a looming teacher shortage. In response, some states have loosened rules to bring more workers into the profession. These efforts are worthwhile, but they're only addressing half the problem. To attract better candidates, school districts should pay teachers what they're worth. For example, more districts should offer performance-based bonuses to educators. Linking teachers' compensation to their performance would draw more skilled workers to the profession while also helping to raise academic achievement. Both of these steps, expanding programs to recruit new teachers and paying educators appropriately, are necessary to end the teacher shortage. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, good stuff there. Looking at these markets here, not much going on today, but everybody obviously focusing on the Jackson Hole get-together. Fed Chairman Jay Powell, what will he say? We're done with the earnings, so focus really goes back to the Federal Reserve, but a lot of folks are trying to figure out, is this a dead cat bounce that we had just coming off of this bottom of this longer-term bear market? Are we on to something in terms of the upside here? Let's bring in a professional to talk about that. Tom Plum, President and Chief Investment Officer of Plum Funds, joins us on the phone from Madison, Wisconsin. Go Badgers. Tom, what's your market call here? I mean, we had that pretty solid 21% move down in the S&P 500. We retraced about half of that, giving a little bit back. How should we think about this market?
Well, thanks, Paul and Carol. It's great to be on again. One of the things, every bear market that bottoms out, it starts out that the big question is this a bounce, a bear market bounce, or is it actually the start of something new? We won't know, obviously, until 6-9 months from now, and it'll be very easy looking backwards. But what we have been seeing is that there's segments of our economy that are very strong, and there's segments of our economy that are very weak. And we expect that the overall, this portends to a modest downturn at the most. We've had 2 quarters where they were negative, but it wasn't negative GDP, it was negative GNP. And we expect that we'll get through the fall's buying season with back to school, the holiday seasons, and that we'll actually start to see some rationalization in these markets, and that this could very well be the start of a recovery.
All right. So does that mean you are actively putting new money to work in equities?
Carol, as you recall, we're a balanced fund, so we have a range. Right now, we're very close to the highest end of our range, which is in the high 60% in stocks. But we're also pretty comfortable now in extending some of our maturities in the bond market, because as the Fed finishes up raising these short-term rates, what you have seen is a shift in the shape of the yield curve, and you've actually gotten some decent returns of over, you could pick 4 to 4.5%, 5% on high-grade commercial bonds right now that are only out 5-6 years to maturity.
So, Tom, I did space, and I did forget you were a balanced fund. So it's just kind of, I don't know, maybe I'm just all the Jackson Hole talk. I also didn't get a good night's sleep. Hey, our Markets Live blog, they do surveys, pulse surveys, and they said, which will win in the next month, stocks or bond? Which will have a better volatility-adjusted return over the next month, U.S. stocks or treasuries? What do you think? You've got to play in both worlds.
Well, right now, we think that the stock market will do better over the next month, primarily because you're not going to have new news on interest rates. We don't expect anything from the Fed until their September meeting. We don't think there will be any radical change in between meetings. And so there's not going to be a lot of new news other than, obviously, everyone watches the monthly inflation figures.
So I see in your holdings Expedia. So I guess you're Carol and I were just talking about, it seems like a lot of young people are traveling a lot, particularly to Europe here. So you have Expedia. Presumably that's a bullish call on global travel.
I apologize because Expedia is actually a bond. We do have Booking, which is the company, obviously, that is also in the online travel setup and mostly international. And there, it is a play. Obviously, you see that what's happening in our airports. There's an incredible amount of pent-up demand for travel and entertainment, as opposed to maybe we need some rationalization in some of the goods products like clothing and things like that, home furnishings. But for the travel industry, it looks to us that it's very strong, and it's going to be reflected in the stocks that we own.
Paul, we're batting 1,000 today. Yep. Tom, you have to forgive us. It's just been a long week already. Hey, one name that you do like, and I was thinking about this too, in a world where we thought, post-World War II, that maybe we wouldn't need so much more, post-Cold War, we wouldn't need so much defense. And if anything, I feel like we probably need more than ever. When I think about the amount of the U.S. aid going to Ukraine, not being critical of it, but it just reminds me that government spending on defense, it is out there in a big way. You like Raytheon.
Yes, we do. And Raytheon has two major plays. It has commercial aviation, which is obviously very important with Pratt & Whitney, and you're seeing a big demand build up in backlog for commercial planes. But they also have a significant part of their business in defense and defense electronics. And the United States spends more money by far than both China and Russia combined on defense. But we have been somewhat complacent, and there's areas that we're not the leaders. And one of those is, for example, hypersonic missiles. There's been some talk that we've had some issues with our tests, but Raytheon just announced 2 major successes on their tests. They also are using a lot of the artificial intelligence to make sure that they're streamlining the process and developing some of these new products that unfortunately looks like we're going to be needing for quite a while.
Tom, just real quick here, one that really got my attention, Yum China. What's the call there?
And just got about 30 seconds.
Well, Yum China is KFC of China, and it's also Pizza Hut in that area. You're going to, just like it opened up in the United States gradually a couple of years ago, China is in the process of opening up, even though the headlines they take 2 steps forward and 1 step back.
Right.
And this is one of the restaurant chains that continues to be very successful in China, and we think that they're going to be, by moving their headquarters to Hong Kong, that they're actually going to stay in favor with the Chinese government.
Well, love talking names with you as always. Tom Blum, he is President and Chief Investment Officer at Plum Funds, joining us on this Wednesday. All right, time to head over to our Bloomberg TV team for Beyond the Bell on radio, TV, and YouTube. We're counting you down.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
Just about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, Sonali Bassett, counting you down to the closing bell. Here to help take us beyond that bell. It's a global simulcast. We're joined by Carol Massa, by Paul Sweeney, he's in for Tim Stanovic, and of course we go cross-audience as we do day in, day out, TV, radio, YouTube, to really pass through what has been a day of steady, small inclines on the stock market, but big declines in terms of volumes.
Yeah, right? I mean, finally, I guess everybody's headed for the beach, or everybody just waiting for Jay Powell's speech on Friday. Having said that, little changes on those major equity averages, Caroline, but again, once I'm looking at that Chinese market and looking at those Chinese names that trade in the United States, outperformance once again up, the NASDAQ Golden Dragon up for a third day in a row, up 2.4% today. This, Paul Sweeney, as China plans more measures to stabilize the economy as their recovery slows. We continue to see China momentum there.
Yeah, a little bit there. And again, just not much movement in the markets today. A few names trailing, however. Advanced Auto Parts put out some disappointing numbers, so people are questioning their growth relative to some of their peers. LabCorp of America announced a small acquisition. They're buying the R.J. Barnabas healthcare, part of their business there. Market's not sure about that acquisition. And Dow Chemical cutting some chemical production due to continued logistics constraints. They continue to affect the companies across the economy.
Paul, in 15 seconds, can you talk to me about a two-year yield that's the highest since June 15, the day before the market bottomed out within the equities, and the signals that you get from higher yields?
I tell you what, I mean, the market's saying that this Federal Reserve is going to continue raising rates here, but you know, the equity markets, we had a little bit of a pullback in the last couple of 3 days, but still surprising. We'll have to see what we get out of Jackson Hole.
We all wait in much anticipation of Jay Powell and the academics, the other central bankers that attend over in Wyoming. We're looking at S&P 500, still managing to claw up about 13 points, let's call it. We're 4,140. And NASDAQ managing to settle up as well, about 0.4%. That's 50 points to the good. The Dow Jones Industrial Average up 61 points, only up 0.2%. And the Russell 2000, once again, sort of outperforming. Small caps really managing to have perhaps outperformed some of the other major benchmarks over the last few days. We're up 0.8% on the Russell 2000. But across the board, volume's pretty muted, Carol.
Yeah, pretty muted. Absolutely. And I find in what was another volatile day to see the VIX go down by about 1 point. We're still at 22, almost 23. But nonetheless, moving back just a little bit, Taylor, on this Wednesday trade.
All right, pop quiz, and you can fact check me here. I think 1 year ago today, the NASDAQ first crossed 15,000. So I think we're there sometime at least this week, maybe this time last year, so we can take a look at.
It's going to be in the Bloomberg quiz this week.
Some of those big superlatives. Let's get back to sort of the S&P and sort of the gains that we talked about. I know that you've talked a lot about some of the low volumes, but at least in terms of breadth, it is a lot of green. You have energy, of course, continuing to lead the way. Dividend financials are also higher by about 0.9% as we think about yields higher and the impact on some of the financials as well. There's only actually one sector in the red. This is wild for our radio audience. The worst performers are actually still all green, but it's household and products that are off about 0.25% as we still highlight some of those inflationary pressures and a consumer that is thinking and feeling those pressures.
All right, so a lot of green I'm seeing in that board behind you for our radio audience, behind Taylor. Let's get to some of the individual names. We talked a lot about Peloton with our Gita Ranganathan. Man, outperformance, up about 20% in today's session. Exclusivity, apparently no more. You can apparently now or soon get a Peloton bike on Amazon. They really are looking ways to rekindle growth, cut costs. Still down more than 60% so far here in 2022, but a big outperformer today. Speaking of outperformers, maybe a meme stock with actual fundamentals. Bed Bath & Beyond up 18%. It was up as much as 30%, 36% in today's session. Wall Street Journal coming out and saying that the retailer has selected a lender to provide financing as it seeks to boost liquidity. So we're going to keep an eye on this one that has had a tremendous run up because of the meme stock retail trade over the last month or so. Tesla, just wanted to mention, up a hair, up 0.2%. We did hear Paul talk about it earlier, that 3-for-1 stock split today after the close. So it starts trading tomorrow, Paul, on a split adjusted basis.
3 for 1, so $300 will get you a share of stock. Still not a bargain for a lot of buyers. But I want to go back to one of those decliners I cited earlier, Dow Chemical. Specifically, temporarily reducing polyethylene operating rates by 15%. And they are a big supplier of that part of the chemical chain. Still, logistics constraints here. We're seeing it continue across the economy. And you think about some of the images we've seen from the Rhine River in Germany going so low and barges not being able to get through. So this continues to be an issue for a lot of people, a lot of companies. Getting that supply chain right to get the raw materials needed for the production process will continue to follow that.
Yeah, we will. And it's notable that that's been reported by the Dow Jones, well, by Wall Street Journal at the moment. We'll keep a close eye on Dow, keep a close eye on some of those key other stocks, Paul, but I also want to keep a close eye on what's happened across asset, because you talk about chemicals. I'm going to look at the world of commodities right now. We are seeing, of course, a big issue for Dow has been the price of oil, and of course, the pushes and the pulls that business feels from that. WTI crude actually managed to push on higher, up about 1.7%. This is, we do see oil still managing to perhaps get a galvanization through the fact that we're exporting so much out of the US, record exports in terms of oil going from here to Europe to try and help, well, alleviate some of those supply chain pressures that we've seen from Russia-Ukraine war, which is now 6 months to the day. I'm looking at also at natural gas that continues to push on higher in the US. On an FX basis, well, a lot of that has moved in tandem with commodities. We've seen Norwegian krone go higher on the back of oil going higher, but overall, it is a dollar strength kind of a day. We have, in particular, some of the commodities-related stocks, the Chinese-related FX pairs, the New Zealand dollar, for example, on the downside in particular, and actually not much move into the franc at the moment. So maybe not a movement significantly into risk-off territory. I'm looking, though, at bond markets, really across the board selling off. Look at the UK gilt, the 2-year gilt, 22 basis points higher, Taylor.
So similar of a story here in the U.S. I've talked a lot about sort of the significance of 340 again on the 2-year yield. The last time we had this was really when the equity markets were bottoming out around June 16 or so. And then we think about yields coming down and the big rally off of that within the equity market space. But there actually still was some movement further out on the curve. A 10-year finally gets back up to 311 and a 30-year, of course, at 332. Carol.
All right, just a bunch of earnings crossing the Bloomberg terminal, including Salesforce. And let's get to that one, because second quarter sales, we're looking at $1.7 billion, so a slight beat. $169 billion was what the street was looking for. Second quarter adjusted EPS, $1.19 versus $1.48. That's year over year. Second quarter revenue, I'm seeing another line here, $7.72 billion. That's up 22% year over year. And for the outlook, Taylor, we're looking at seeing third quarter revenue, $7.82 billion to $7.83. They're reining it in. The estimate on the street is for 8.05 stock. Little change, little higher. Now it's unchanged in the aftermarket.
And Mark Benioff saying that we are thrilled to initiate our first ever share repurchase program to continue to deliver incredible value to our shareholders on our path to $50 billion in revenue in fiscal 2026. So again, a further share repurchase program for another company that just continues to get it done.
Yeah, deciding that that is the way to best be spending their money at the moment, rather than perhaps some other areas of investment. I'm looking at Snowflake, which is jumping after hours. They're seeing full year product revenue coming in at 1.19 to 1.92 billion, basically in line with expectations. And in fact, when you look at their second quarter, the overall revenue was a beat, $497 million. The product revenue coming in strong as well. And they're pushing us forward, giving us a sense of the third quarter, which will also be 500 million thereabouts, again in line with expectations. So this is a company that manages to outperform, and really the market liking that we're not getting any sort of cutting guidance from Snowflake.
Yeah, check that out. Shares up almost 13% after hours. You have Frank Slootman, a Wall Street favorite, CEO of Snowflake, saying that he's excited about a growth opportunity. So speaking about growth again, after beating on margins and on revenue across certain product lines, multiple product lines really, and talking about their next frontier of innovation. We haven't heard those kinds of words in a while from lots of companies we've covered.
Yeah, the Snowflake numbers kind of, I mean, the stock's up here 18% in aftermarket hours here, and it kind of goes to a commentary that Caroline have been having today, which is simply growth stocks. What do you do with them here? I mean, and what you're seeing here in a lot of these earnings is they still put up this significant top line growth. They generate tremendous amounts of free cash flow, and in a lot of markets, that works for a lot of investors. So a lot of folks rotated into the more cyclical names earlier, but some of these growth names are still very much in play.
Stock's down 52% so far this year,
Yep.
though.
Yep.
It's been really decimated. But I love anything in the tech sector, Taylor, because I feel like it tells us our companies continuing to spend on IT and other technology. We've often heard strategists say that's where investors should put their money, but we really get a good view on it when these companies report.
In about 15 more minutes, we'll get a weigh on the IT and the server market as well when we think about NVIDIA and the demand, of course, for chips. Paul, I know that you'll correct me if I'm wrong. I think Gina said that really only 10% of the companies in the S&P 500 even issue forward guidance. So gleaning any data point from that as we can is becoming ever more so important.
Yeah, we'll have to see there. NVIDIA is certainly a big play on the chip business and the gaming side of the business.
And NetApp also reported in the after hours following their earnings, and they're up about 7%. We're going to talk to the company's CEO in just a moment. All right, guys, that is a wrap for radio, TV, YouTube. The market close on this Wednesday. We call this simulcast, this cross-platform coverage beyond the bell. We'll be back again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week on radio, on YouTube. Carol Massar, Paul Sweeney in for Tim Stenovic on this Wednesday. We are getting a bunch of earnings within the tech world, if you will. Different players. We're waiting results from NVIDIA. So as soon as they cross the Bloomberg, we'll bring them in. In the meantime, let's get to Dan Morgan. He is Vice President, Senior Portfolio Manager at Synovus Trust Company. They've got roughly $20.7 billion in assets under management, and he joins us on the phone from Atlanta. So we don't quite yet have NVIDIA results, and we're waiting for them. But you also do cover Salesforce, from what I understand, Dan. That stock's down about 6% in the after hours. They did announce $10 billion for a share buyback authorization that always gets our attention. What jumps out with you as these numbers just crossed?
Well, Carol, I'm just starting to kind of get the numbers in. I was waiting on NVIDIA.
Me too.
But not too big of a surprise on Salesforce. I know the stock was trading up in advance of the numbers. We know that the overall enterprise software area, like Adobe, is in that space. We have Snowflake, I think, coming with numbers later today, too.
They're out, and they, too, we're seeing that stock in the after hours. Paul, I think we just talked about with our TV colleagues. It's up 16% in the after hours.
Right.
Yeah, so I think we're getting a bit of a follow-through on just overall strength in terms of the enterprise group. I mean, we know that Snowflake is tied to data server. We know that Salesforce is, basically everybody knows Salesforce, right? Every company has Salesforce in terms of the CRM, customer relationship management. So I think that in terms of the numbers so far, I would have to construe them as going into this print, there were a lot of worries just because of, Microsoft kind of missed a little bit on top line on a couple weeks ago. We've had a couple of software companies come up a little bit short. So I think it sounds more like a sigh of relief with the Snowflake and the in terms of the CRM numbers, in terms of Salesforce. And that's where we're getting the reaction that we are. I think coming in this print, everybody's very worried.
Yeah, Dan, so for NVIDIA, again, we're waiting on those numbers to come out. But, of course, the company pre-announced results earlier this month, taking down guidance here. And they really called out the gaming business here. Just give us your sense of the dynamics in the gaming business here and its impact on NVIDIA. Maybe, obviously, what its response should be.
Yeah, I mean, it's really interesting if we think about gaming. We know there was a huge spike during the pandemic, right? And Carol and I have had a lot of conversations in the past about COVID on and COVID off stocks. Yep. And the gaming was definitely a COVID on. And the comparisons were getting much more difficult for them. And now we're starting to see that come to fruition. And as you said, they pre-announced that gaming was going to be down about 33%. I think they were looking at about $2.04 billion in revenues. I think the big surprise, or what we want to get more indication of when we get some sort of color on the conference call, is in terms of data server, because they also brought those numbers down to $3.81 billion. And they said that it was a supply constraint issue, not demand driven, which sounds like Cisco. But they haven't had issues in the past with supply constraints. So why all of a sudden now has it become an issue? So those are the kind of issues coming into this report.
Yeah, I guess the market's really looking for a sense of, how long is this going to last in the gaming space? How long will this correction really last? What's your view there?
Well, they have some exciting technology. I don't know if you guys have ever sat in on their investor calls where they go through all of their different chips. So they have a new chip coming out, it's new architecture called Hopper, which is a graphics-based technology that's going to be used in the gaming space. So they definitely have the right products. It's just, again, that we're getting this slowdown. So I would expect comparisons to continue to be difficult really through fiscal year 2023 for them. We know that Take-Two Interactive came out. They made Grand Theft Auto recently and lowered their full-year guidance. So we are starting to see a slowdown in the software makers, and this is trickling down into the graphic providers like NVIDIA.
Hey, Dan, and as you said, we've talked about, pandemic, post-pandemic, what our worlds are. So when we look at a name like NVIDIA and the gaming world, is it just a case of kind of going back to normal and what it was pre-pandemic? And that's how we need to look at it as analysts or investors in terms of this name? Or is it something more significant if we see the numbers pull in?
No, I would agree with you, Carol. I mean, we're just going back to some sort of normality in the gaming space. We have to remember, Carol and I, we've covered this stock for a long time doing interviews. We remember when gaming revenue was substantially greater than data center revenue. And then that surpassed. Remember, we had a couple quarters where that was a big deal for us. So now we have data center really being the leader, right, in terms of their overall revenue. So I would expect gaming to slowly work itself back out by, let's say, the end of 2023. And, the data center space is very, very strong. You look at, the data center service providers on the last quarter wrap up. I mean, Acer, which is Microsoft, they were up about 40% in revenues. You look at GCP, which is Google's product, that was up about 35. Amazon's AWS, their revenues were up 33%. So, AMD reported data center growth in their chip space was up 83% on their last quarter, even though PCs were down. So the data cloud space is still very strong and very viable. But like you said, Carol, when will gaming get back on track? And is this something that's an systemic problem? It's going to last for years. I think it's something something's going to be tough comparisons to 2023.
How about the competitive landscape, Dan, in that gaming business here? How does NVIDIA and its products stack up?
Well, I think they stack up really well. I mean, even though we're kind of, being down on NVIDIA, even after the revised guidance, we're looking at 61% jump in revenues in their data center space. I mentioned AMD had an 83% jump. Intel was down 16%. And like I said, they've got this new technology that they're very excited about. It's based on this Hopper architecture. It's both in the gaming and also in regards to data center. And, they definitely have some huge inroads that they're making in terms of Omniverse. They've got a lot of exciting things on the plate. They're also getting more into software. But their products definitely stack up very, very well in competition with, let's say, Intel and AMD, which are their two biggest competitors.
All right, so we are waiting NVIDIA earnings. I'm looking at it in the aftermarket. It looks little changed. The numbers haven't come out yet. So, Dan, we have a few minutes left here. What do we need to have on our radar as they come across, and what would be kind of a shocker or surprising either result or commentary from NVIDIA?
Well, everyone, Carol, is going to be really focusing on guidance going into their next third quarter, right? Because we know that they already reduced the numbers going into the second quarter. So, the street's going to be very focused on, are they going to be able to achieve the third quarter estimate, which at this point in time in revenue is $7.26 billion. That's about a 2.5% growth rate from a year ago. If for some reason, Carol, they come up and basically say that they're going to come under that number, that's going to be a huge black cloud on the stock.
There are 49 analysts on Wall Street covering this name. 37 have buys, 11 have holds, and 1 sell here. So the street's behind this name. So is the bull case simply one of time, execution, or is it just, I'm just betting on this market?
Yeah, I think so. I think the problems that they're having in supply constraints in regards to data center are going to work themselves through. I would expect the tough comparisons in gaming because of the pandemic in the past to work through at the end of 23, and then they'll get back on track. I think fundamentally the company is still intact. I just think they're going through a little bit of a slower period right now, and we just have to kind of accept that.
Yeah, it is pretty fascinating. If you had one question you could ask the NVIDIA management, what would it be?
Carol, it's just given us more color on that cycle in gaming. I'm predicting the end of 23, but it would be great to hear from them in regards to, hey, we expect this to impact our gaming business either positive or negative in the next 6 to 18 months, and this is what we can hope to achieve in terms of revenues. And I think there's going to be about 20 different questions asked 20 different ways by the analysts trying to corner them into giving.
No, you guys never do things like that, you analysts and investors. You do know as soon as we say goodbye to you, NVIDIA is going to cross the Bloomberg terminal. I have no doubt about it. Dan Morgan, you always cover so much for us and so smartly. Thank you so much. Dan Morgan, he's VP and Senior Portfolio Manager at Synovus Trust Company on the phone from Atlanta. We are awaiting NVIDIA earnings. I do want to point out that Salesforce is out with their results here after the close. That stock is down now about 4.5% in the aftermarket. Some of the headlines, I feel like Salesforce announcing that $10 billion share buyback authorization, Paul. Also talking about their second quarter adjusted EPS, $1.19. That was a beat. 103 was the street estimate. Second quarter revenue was $7.72 billion. That too was a beat, slight beat. 7.69 was the estimate.
Yeah, so some decent numbers out of there. Also reporting NetApp. Net adjusted first quarter EPS at $1.20 beat the estimate of 110. Sales came in at 1.59 billion, better than the came in at 1.59 billion, better than the 1.55 billion estimate. So some good numbers there. Let's bring in the CEO of NetApp, George Kurian. He joins us on Zoom from Menlo Park, California. George, talk to us about the quarter you just reported. The stock's up about 3% in aftermarket trading.
Good afternoon. Thanks for having me. We are excited. We're off to a great start to our new fiscal year. We just completed the first fiscal quarter of the year and saw broad-based demand and strength across all our geographies. We have set record highs pretty much across the board in terms of revenue, billings, gross margin dollars, operating margin dollars, and EPS for Q1. So I'm really pleased. It's always good to get off to a good start in the year.
Yeah, absolutely. That's a great way, better than the alternative. Paul did break down some of your numbers. Your customer base has included the likes of Amazon, Microsoft, Alphabet, Hitachi, Intel, Tata. It's global in nature. It really gives us a good clue in terms of what's going on in the economy. How would you describe, in terms of more color, demand for your core products from your big customers?
We're involved in helping our customers store, protect, and use their data for business advantage. We do that not only with data center equipment for their data centers, but as you mentioned, with cloud-based services that are deeply integrated into the world's leading cloud providers, Amazon, Microsoft, Google, IBM, and others. And we saw a really good portfolio balance across all of our geographies and customer segments. Data, as you know, is foundational to competitive advantage, understanding customers, working with your supply chain, and so on. And so we continue to see demand strong, and we've had to work really hard to have all the supply to meet it. And we continue to do that work.
Talk to us about the supply chain. It's been such an issue for so many businesses across so many parts of the economy, and it's a global issue here. How is it for your company now versus maybe a year or two ago, and kind of how do you think it's going to progress?
I think a year ago was the really difficult time. We've seen kind of steady improvements in silicon availability, and I would say cautiously that we've seen stabilization in terms of the silicon supply chain. It's still not where it is needed to be to meet all of our demand, but at least it's stopped backsliding. We have also been doing work to deal with some of the freight and logistical challenges. I think as the sort of the gap between demand and supply continues to get a little bit smaller, with demand still ahead of supply, we hope that these things get better over the course of our next 12 months.
Well, I do wonder too, George, how did supply chain issues or pressures or constraints impact your ability to, in terms of your adjustments or your outlook, or raising your outlook estimates for the full year?
I think we have had to do a huge amount of work to be able to meet demand. We've had to re-engineer products. We've had to source supply in multiple parts of the world and sort of extraordinary measures to meet demand. I would say that backlog is still ahead of pre-pandemic levels. So we're still in elevated sort of backlog situations, and we'd love to be able to, sort of make those products available to customers. We're working closely with our suppliers to do that. We did, in our press release, reconfirm the full year guidance, which, given the currency movement subsequent to when we guided, is actually taking up guidance, as you noted, by about 1 or 2 points. So we feel good about demand. We feel that we've got to go do the work in supply and continue to do the work to meet it.
George, sit tight for a second. We're going to do a little bit of news, and then we'll come back and continue the conversation. We are talking with NetApp CEO George Kurian, joining us via Zoom from Menlo Park, California. Shares of NetApp, by the way, they're up about 5.4% here in the after hour. This after the company reported second quarter results and also gave out an outlook, but we'll continue in just a moment. Meantime, we said we would let Dan Morgan go of Synovus, and lo and behold, NVIDIA did come out with their results. We're seeing the stock move in the aftermarket. Paul, it's actually a little change. It did sell off initially, but let's go through some of the numbers. Second quarter, Go ahead.
Yeah, looking at second quarter adjusted EPS, 51 cents. The estimate was for $1.25, so a big miss there. On the sales front, second quarter revenue came in at $6.7 billion. That matched preliminary numbers. So it's it's a little bit of a mixed quarter there. I'm sure they're going to have some, when you see that EPS miss on a revenue that came in line, they had some, I'm going to guess, some unsuspected expenses creeping there, probably from logistics as well.
Yeah, interesting too. In terms of the outlook, third quarter adjusted gross margins, they're talking about 65% plus or minus 50 basis points. Third quarter revenue, $5.9 billion plus or minus 2%. The estimate that's out there is $6.92 billion. So that seems to be quite a miss as well. Second quarter adjusted gross margin, 45.9% versus 66.7% year over year. So that's not versus the estimate, but more just giving an idea of where the business is today versus a year ago.
Yeah, and you look at a lot of these tech companies, it's better to look at the non-GAAP EPS. That came in at 51 cents, missed by just a penny, and inline revenue. So from a non-GAAP EPS, which takes into account stock compensation and lots of other issues, that's what analysts and investors really tend to look at. And that was not much of a miss there in revenue in line. So the stock, looking at the stock in the aftermarket, it's pretty much unchanged.
Yeah, initially we did see some selling, but you're right. It's kind of flat now as I guess investors settle in with it. The stock is down 41% so far in 2022. We're talking about NVIDIA. It's a massive market cap, 430 billion market cap. So, in the gaming world, as we talked about with Dan Morgan, this whole idea of like, what is this gaming world post-pandemic, and this is something I think we're all trying to get a hold on. All right, you are listening and watching Bloomberg Business Week on this Wednesday. We're going to come back with the NetApp CEO, George Kurian, continue our conversation right here on Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week on this Wednesday. Carol Master, along with Paul Sweeney. I got to say, Paul, I'm just watching NetApp in the after hours, and it continues to hold on to gains up about 6% here.
Yeah, so some interesting moves there. So a lot of tech companies reporting today after the close.
A lot. We're going to get back to our conversation with the NetApp CEO, George Kurian, in just a moment. First up, though, back to the markets, the overall trade, the closing numbers, and Doug Krisner.
Well,
Hey, Doug.
I'll get that to closing numbers in a moment. I want to get to Salesforce shares right now under pressure in late trading by about 5.5%. The company gave a forecast for third quarter revenue that was below estimates. At the same time, Salesforce did announce a $10 billion stock buyback authorization. Also seeing NVIDIA shares heavily traded right now down just 0.9%. Adjusted EPS for Q2 beat the Bloomberg consensus by a penny at 51 cents. And for the last quarter, data center revenue up 61% from last year. I think the trouble for the market right now is a disappointing forecast for Q3. Now, in terms of the overall equity trade today, we were higher, but not by much. Modest gains, I will say, in front of what is likely to be a hawkish speech on Friday from Fed Chair Jay Powell. Late yesterday, the head of the Minneapolis Fed, Neil Kashkari, was telling Reuters his biggest fear is misreading the extent and persistence of price pressures and then having to deliver even more aggressive rate hikes to control inflation. Dow Industrial Average today up 0.2%, S&P 500 better by about 0.3%, NASDAQ comp up 0.4%, and a push in yields across the curve today, particularly at the short end. A 2-year now at 3.40. We were up 10 basis points. A 10-year at 3.10, up nearly 6 basis points on the day. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Doug Krisner, thank you very much. We appreciate that report. I think I usually talk to Doug on the air, so that's just kind of,
We love Doug.
He kind of walks in very quietly in the afternoon and just does his thing, man.
He's like, that big star.
He is. I know. It's good stuff. All right, speaking of big stars, we still have George Kurian. He stays with us. He's the Chief Executive Officer of NetApp, joining us on Zoom from Menlo Park, California. So, George, I'd love, from your perspective, where is the biggest source of growth for your business here over the next 5 years? I'm going to ask you to think a little bit far out, which I know your board asks you to do occasionally. But on a 5-year plan, you're in so many pieces of the pie that are, have some really strong growth dynamics. Where do you really think your focus should be?
We really see the two big transformational trends are data-driven business or digital business and cloud. We on the data side, we help our clients store, aggregate enormous amounts of data, whether it's for traditional applications like an ERP or you mentioned Salesforce, those kinds of applications, or for the really modern advanced analytics and artificial intelligence applications. We, for example, work with companies like Siemens Healthineers, which makes medical imaging systems, and we use AI technology together with huge amounts of data to be able to make the life of a radiologist much easier. We can help them predict which patients are more likely to have COVID or find cost-effective ways to deal with breast cancer and so on. So that's one, data, and the other is cloud. You see there's a vast migration of customers to using cloud-based technologies, and we help all of the leading cloud providers as well as their end customers to make their cloud projects much more reliable, performant, secure, especially security of data from attacks like ransomware is a growing trend that we have really good solutions for.
Carol, I think I'm even in the cloud.
I know I am.
If I'm in the cloud, it's a thing. It's a market. So, George, I'm looking at our PGEO function on the Bloomberg terminal that allows me to look at breakdown of your businesses by lots of different measures. And by geography, I see that about a little more than half of your business is in the U.S. and Canada and Latin America, maybe about a third, 30% in Europe, and about 14% in Asia. Going forward, where regionally will you be allocating more of your capital? Where do you see more growth on a regional basis?
we continue to focus on the biggest markets in each of those geographies. I think several years ago, about maybe 5 or 6 years ago, we decided to participate in the China market, which is the largest Asian market, through a joint venture with Lenovo that allows us to serve the vast expanse of Chinese customers with local partnerships and local knowledge of the local market. So the rest of the world we serve through our own, kind of sales and go-to-market organization and through partners. And we're pleased with the strength of our, it's a balanced book of business. We've seen strong adoption of our portfolio across all the leading markets. And so I'm excited about what the future holds.
Hey, George, I do wonder, too, in some of the major macro issues that are out there, whether it's nearshoring, offshoring, onshoring, and then throw on top of that geopolitical tensions, which is creating all of that changes. How is that impacting you guys in terms of where you produce, where you do business?
Clearly, it's a great question, Carol. I think clearly over the last few years, both because of geopolitical risk, but also just supply availability and risk management, we've built a diverse kind of geographic base for supply and manufacturing. We've moved our dependence from the Far East to much more local markets. So we manufacture heavily in Mexico and in some parts of Europe. We've moved, our supply base from a silicon perspective into a diverse mix of silicon providers. And we've moved the way our systems are built, rather than from highly integrated systems that have risk from one component, we're moving it to more of a Lego style building block model, so that if one component isn't there, you can slot in another one. So we've had to do a lot of work. We continue to believe that the world's, we need to think about supply rather than in the old model of just-in-time management, to actually de-risking supply to meet demand.
Yeah, we've heard that from a lot of companies, a lot of different industries. Real quick, George, 30 seconds. Labor. You have about 12,000 employees. How tough is it to get labor? How tough is it to keep labor?
I think it's a very competitive job market, especially for the type of talent, software and cloud talent that we look for. We've got a really good value proposition for employees. They get to do great work in a very supportive culture, and we got a global population, so we can source talent wherever in the world it is.
Yeah, but is it getting more expensive? Just got about 15 seconds.
Yeah, I mean, clearly having the best talent in the world is a source of competitive advantage, and we've got good compensation programs to meet what's needed.
All right. Listen, thank you so much. Really appreciate all the time on what we know is a busy day for you folks. George Corian, he is a Chief Executive Officer at NetApp via Zoom from Menlo Park, California. This, as we see NetApp reporting after the close, and its stock is up about 5% in the after hours. So investors reacting favorably to what the company had to say. All right, let's get back to World and National News. Off to Nancy Lyons. She's in D.C. Hey, Nance.
Hey, Carol. President Biden says he's following through on a campaign promise and helping millions crawl out of student debt. Bloomberg White House reporter Josh Wingrove on what President Biden is proposing.
$10,000 in debt forgiveness, or up to $20,000 if you're someone who received Pell Grants, which of course go to lower income families. The payment pause is another 4 months, but ending. That means student loan payments are going to resume as of January of this coming year.
That's Bloomberg's Josh Wingrove. Republicans have been critical of the move, arguing it could fuel inflation and put taxpayers on the hook. As he was wrapping up his comments on student loan debt, President Biden was asked if he was given advance notice about the FBI search of former President Donald Trump's home.
I didn't have any advance notice. None. Zero. Not one single bit.
The Justice Department has a deadline of noon tomorrow Wall Street time to provide a redacted version of the affidavit that allowed the search of Trump's Mar-a-Lago home. Well, it's been 6 months since Russia invaded Ukraine, a poignant milestone that also falls on Ukraine's Independence Day. Dr. Amanda Sloat is with the National Security Council.
It's a sobering reminder that just as the Ukrainian people had to fight to defend themselves and get their independence 31 years ago, they are unfortunately in a similar position today of fighting to defend their democracy, their sovereignty, their independence. The U.S. policy today, 6 months in, remains as it has been for the last half year, which is to give Ukraine the support that it needs to enable it to effectively defend its democracy.
Dr. Sloat, speaking with Bloomberg, says the Biden administration today announced another $3 billion in assistance. Global news 24 hours a day, on air and on Bloomberg Quick Take.
All right, Nance, thank you so much. Nancy Lyons in our Washington, D.C. newsroom. A lot going on. We've mentioned some of the earnings. NVIDIA is down about 2.5% in the after hours. Salesforce is also down. We thought we could just take a little bit of a breather for those of you thinking about heading home or wrapping up your workday, because this story, Paul Sweeney, is among the most read on the Bloomberg terminal.
Yeah, I can't find it on my terminal, but it's about a yacht that sank. So, which
I'm sending it.
Here's the issue. No, the issue is there's two kind of yacht stories out there. One where a yacht sinks, but the other ones I always read are about the Russian yachts, the oligarchs, their yachts getting confiscated and then auctioned off. Those are the ones I like, because I'm thinking, boy, should I put in a bid? You know? But these are things that go for, like,
No, you want to buy a salvage. You want one that's sunk that really isn't ruined. I know somebody who did that and got this incredible boat for not a lot of money, and was somebody who could work on boats, fixed up the hull, and has this incredible yacht as a result.
And I know a lot of folks after the hurricanes that went through, the Bahamas and the islands, they'll go down there and they'll search for, because if a boat is officially, what's the term? Just said that, it's lost.
Yeah.
The owner says, I relinquish all ownership to it.
Yeah.
That frees it up so anybody can come and claim it.
Yep.
And do what they want.
Yeah.
And a lot of owners will do that stop paying insurance on it and all that kind of stuff. They'll just say, I give up.
I'm done. Yeah. As someone who is a boat owner, and yes, it is a hole in the water that you throw money into, but it is really lovely. But yes, you can kind of just abandon it and somebody can pick it up. And, many boats, if it's not a wooden boat, a lot of it's fiberglass. Fiberglass, you kind of can't kill it. Yep. So you can pull it up from the bottom of the ocean or wherever it's sunk. And a lot of times you can do kind of bring it back to life.
And that happened to a fellow a captain we used down in St. John in the Virgin Islands, and he had two boats in his fleet, and both got destroyed. He stayed on one throughout the hurricane somehow, crazily. The other one got destroyed. There's a picture of it, like way up in this trees and everything. This is a huge sailing lot, yacht. And that's the one he said, I'm done. And a kid came along that used to work for him and claimed it.
Right, and it's probably sailing on the high seas now. All right, you are listening and watching Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Lots of earnings news after the bell. We'll get to the numbers momentarily. In the regular session, we saw modest gains for equities in front of what is likely to be a very hawkish speech on Friday from Fed Chair Jay Powell. Dow Industrial Average ahead 0.2%. We had the S&P 500 rising about 0.3%, and the Nasdaq Comp gains about 0.4%. These gains came even though bond yields rose across the curve today, particularly at the short end. We've got a 2-year now at 3.40. We were up 10 basis points on the day. 10-year Treasury at 3.10. The gain today, more than 6 basis points. So now to the news after the bell. We'll begin with Salesforce, the company giving a forecast for the current quarter below estimates. That's on the revenue side. But the company also announced a $10 billion stock buyback authorization. Salesforce down about 5.6% right now. We also heard from NVIDIA, non-GAAP EPS, 51 cents. That beat the Bloomberg consensus by a penny. Data center revenue was up 61% from last year. Here's the concern. Gaming revenue in Q2 down 33% from last year. And another worry? Well, for the current quarter, the revenue forecast was a little disappointing. NVIDIA shares right now in the late session down about 2.5%. We also heard from Snowflake. The company is projecting sales for the current quarter above estimates. It's a sign that companies are still investing in Snowflake software. It helps businesses organize data on the cloud. The stock right now is up about 16%. I'm Doug Krisner, and that's your Bloomberg Business Flash.
Doug, remember when summers used to be quiet?
Definitely.
You got it all in there, though. The amazing Doug Krisner there with a Bloomberg Business News Flash. Well, we have leaned, Paul, big time into healthcare this week. I don't know if you've been doing that I'm assuming with you guys, too. Many investment professionals seem to like the space. Many continue to say the industry is ripe for more and accelerated innovation. So with that in mind, let's bring in our next guest. She is Anna Protopapas. She's president and CEO of the biopharmaceutical company Mersana, and she is joining us on the phone from Cambridge, Massachusetts. Anna, forgive me if I've mispronounced your name and if I've mispronounced the company name. It's been a crazy day. How do you say your company?
It's Mersana Therapeutics, and you pronounce my name perfectly.
Okay, thank you.
She's a pro.
We're so delighted to have you here. Tell us a little bit about the work you are doing, because I do mean it, that many would say that healthcare and therapies and treatment modalities, they are ripe for innovation. So tell us a little bit about what you guys are up to.
Yeah, it's a very exciting time for Mersana. We are working on antibody drug conjugates, which is one of the fastest growing treatments in oncology. And we've really innovated around how to design this type of molecules. And we're in the very fortunate situation to have our lead asset in a registration-enabling study. We hope to have our top-line readout next year, and if all goes well, a filing for approval with the FDA. And then we have 2 new, very innovative molecules that have just come into the clinical development stage, one of which is the subject of a very exciting deal we announced a few weeks ago with GSK. So
can we take a step back? Because I was pre-med, but I have to say that I was.
Wow,
and here I am in journalism. But I have to say, I want to go back to, because Paul's really smart. I'd like to think I'm fairly smart. But you talk about these next generation antibody drug conjugate cancer treatment. Can you kind of dumb it down a little bit and tell us why this is so interesting and distinct?
Yeah. Well, ADCs, it stands for antibody drug conjugate, which is exactly what it means. It's an antibody that carries one or more drugs on it. And it's the penultimate targeted therapy. Think of it as a precision weapon. So the antibody is designed to specifically bind to proteins that are only on the surface of tumor cells and not on the surface of healthy tissues. So the antibody, once it's systemically given to the patient, sort of hones in quickly to the tumor cell, binds to these unique proteins, gets pulled into the tumor cell, and then the drug that it carries is released and kills the cell. And it's a very exciting way to really attack cancer, which we all know is a terrible disease. We've made lots of progress over the last decade, but there's still a lot more work to do. So we've really innovated around how do you design this antibody drug conjugates, and importantly, what kind of drug do you attach to them? Historically, and we've done this as well, you've put drugs on the antibody that are called cytotoxics, which means they kill the cell. But we've done something that has taken ADCs beyond the cytotoxic realm, and we've put on the antibody molecules that activate our own immune system to teach it how to attack the tumor. And that's a very exciting next application for ADCs.
Carol, you said we think we're fairly smart people, but I think Anna wins this game. She has an undergraduate degree at Princeton, a master's at MIT.
Blown away.
Chemical engineering, who does that? And then an MBA from Stanford. So we'll give it to you, Anna. All right, so give us a sense of what it's like to work with the FDA. I'm not very familiar with that process, but I think we've all become pretty familiar with it during the pandemic, how biotech and pharmaceutical companies interact with the FDA. Is it any different now than pre-pandemic? Because one of the things I was amazed about is how quickly these pharmaceutical companies were able to get the vaccines out.
Yeah, well, I think we have had very constructive interactions with the FDA. As I said, with our lead asset, we work with late-stage ovarian cancer patients. It's really a terrible disease. These patients have very few options. And once we had early data that showed promise, we engaged with the FDA, and they guided us on how, provided very constructive feedback on how we could proceed into the registration-enabling studies we have now. And obviously, the data is going to drive the ultimate decision of the FDA. But I think you should think of the FDA as really consisting of thousands of very dedicated and experienced clinicians, scientists, who are very keen to work with the industry when innovation is available and when there's unmet patient needs in order to bring the right molecules forward.
Anna, I'm blown away with it. And I feel like anything that is kind of trying to figure out how to use our own body, to use our own immunity to help fight something like cancer, to me, logically makes sense. We just have about a minute left here. Do you need to go, though, through clinical trials with what you are doing for every different type of cancer?
Yes, of course. And, we need to make sure we understand how these drugs work, that we bring them forward in the way that is most effective for patients and the most safe for patients. So that's the name of the game. It takes time, it costs money, but ultimately the reward for all of us, and particularly for making a difference in patients, is tremendous.
Just real quickly, 20 seconds. When does this get out more mass market? Is it a while?
Years? Our lead asset will hopefully focus well. We'll have a readout next year, a filing, and then 2024 would be our target timing.
Well, stay in touch because you definitely win it. Because your background just blows us away, and we really enjoyed it and would love to hear how you guys are progressing. Anna Protopapa, she is President and Chief Executive Officer of Mersana, joining us on the phone from Cambridge, Massachusetts. That kind of treatment just... unbelievable.
Yeah, I mean, amazing advances are being made, and the money is still going there. And so hopefully the good folks up in that Cambridge, Massachusetts area, where a lot of the biotech companies are, that continue doing the good work.
Join us again tomorrow?
Absolutely. Wouldn't miss it.
We love it. Paul Sweeney, have a good evening, everybody. This is Bloomberg.